Welcome to BitLab Academy Daily Alpha. In today's video, we're going to be breaking down how to properly identify trade setups with confluence between multiple indicators so that you can make the most profitable trades. Because it's not about just seeing one signal and going all in on a trade. Believe me, I've done it and I've lost tens of thousands of dollars. And the whole point with BitLab Academy here on the BitLab Academy YouTube channel, especially, and within the BitLab Academy courses on bitlabacademy.com, our whole agenda, our whole mission is to help walk you through whatever stage in your journey on crypto and blockchain trading, investing is, and take you from beginner to pro so you can sidestep a lot of those huge issues, those huge errors that we've had along the way so that you can go straight to success, straight to consistency, straight to profit. So my name is Kelly Kellum, and in this video, what we are going to be doing is showing you how to find that 1, 2, 3, 4 points of confluence. So before we move on, welcome to the stream. Thank you so much for being here with us. Please hit that like button, hit that subscribe button, ting that bell, because we have daily live streams at 10:30 a.m. Eastern Standard Time every day here on the BitLab Academy YouTube channel. But we're also doing these small alpha series with very focused lessons every day where we pull out what's going on in the chart so you can watch this at any time so you can refresh and sharpen your sword, whether it's learning how to do trading view in the most effective way, quick keys, hot keys, which I'm going to be doing in the next video, or how do you find those 1, 2, 3, 4 points of confluence so you can find profitable trades. So without any further ado, let's go ahead and jump on into the charts. And again, I want to say, it doesn't matter what day of the year it is, if this is 6 months from now or right now, the whole point here is the concept. So what we want to do is identify when we take that long, or when we take profits, and when we exit the trade. What are the signals that give us the confidence to do that? We want to find signals and indicators that we are familiar with and that we understand. Very standard stock indicators here are MACD, which is moving average convergence divergence, RSI, and stochastic. Another whole entire set of indicators that we can use, and I'm going to save this just as is. We're going to do MACD, Stoch, RSI, save, and as you can see, what I just did right there is I saved it right here, so I have the template saved up here at the top. But what we're going to do is we're going to go into the BitLab indicators as well, and you can see this is a whole different lens onto the market. And so the point here being is no matter what tools you use, it's good to expose yourself to other signals, other tools, and see how those correlate with price action over time. You can define a strategy that works best for you. I can bring up my MACD, RSI, stochastics, and regardless of what strategy you use, what we're going to do here is I'm going to show you how to find those 1, 2, 3, 4 points of confluence so you can make those profitable trades. A good starting point here, when we can look at this, the MACD here on the bottom of the screen. And as we can see here, we have a very clear signal of when the light blue line crosses over the red line, which you can see more clearly here. The blue line is crossing bearishly on the red line. So this is a shorter moving average to a longer moving average of the moving averages moving average. It's kind of a mouthful there, but essentially you are weighing, engaging the momentum. If momentum is increasing to the upside, if it's decreasing, and then if it's increasing to the downside, which you can see very clearly here. And so what we want to do is we can use this as a single signal point, and then we can use this in confluence if it's congruent, if it's similar, if it's finding similar signals as to the strength of the market, which is what we get here with the RSI, and then similarly with the stochastics, which is it's measured very similarly to the RSI relative strength index. Stochastics is the stochastics math of the strength and momentum. So this is a bit faster signal read than the RSI. While they're both very excellent metrics to gauge what's going on in the market, using these three together is what gives you the best data, the best alpha on a trade. A great example of this is, as we can see, for instance, right here, I'm going to put this is where I was right here. I'm going to put option, or if you're on PC, Alt, and then V, that puts a vertical bar. And we can see right here, this blue signal line, this quicker moving average, it fakes out. We have a bit of a trap here where this looks like it's going to cross up and go bullish again, even on these bars here in the middle, which these are known as the histogram. If anybody ever says histogram, this is what you're seeing. And this is measuring the distance between these two lines. So as you can see, as these get further apart, these histogram bars also get taller. And similarly, when they cross, look at this, it's right when it crosses, and as this expands, this width, this means momentum is increasing. If this is expanding to the downside, momentum momentum is increasing to the downside. And so what we're seeing right here, we see this histogram is a very easy way without having to look at these lines. It's signifying the same thing with two different ways of looking at it. We can see that the momentum is reversing and it's converging right here at this zero line, suggesting that maybe we're going to have a bullish price action move. So now what I'm going to do is I'm going to double click on the chart, which is going to minimize this and go back to the price action, as you can see there. But now because I have this vertical line here, we can look deeper at some of the other signals and see if there's confluence here. Now, before we go any further, one of the things I do want to point out is the fact that we always need to look at this chart right here. If you haven't yet, come over to my Twitter and download this chart. This is a market cycle trading cheat sheet, similar to the Wall Street cheat sheet. That it's more about emotions and what people feel at different stages of the market. But in this case, what we're looking at is what is the action plans? What should we be looking for at these accumulation stages, which is down here on the left and down here on the bottom, or at the top, this distribution stage. And what's important here, and this is why it ties in with what we're talking about with signals and confluence. We need to use a 3-cycle strategy: the macro, the midterm, and the micro. Some people call the micro the local. So that's anything really below the daily, but I'll say below 4 hour, 1 hour, 24 minutes. That's all looking at the very small time frames, because you have this exact sort of market cycle playing out on multiple time frames at any given point. So what we want to do is utilize our signals on the chart, our indicators, and find confluence on the larger time frame, and then where we're seeing larger divergences and larger pressure building that's counteracting the action. So say price action is falling, but you're seeing strength increasing. That's a bullish divergence. And so then we can zoom into smaller midterm and smaller term time frames, so we can actually find what the signals are saying, what the indicators are saying, and find those points lining up where the MACD, RSI, stochastics, as well as the momentum on the chart is lining up that says, yes, this is a good probable buy. I can be more confident in this trade. And you do this consistently and you become a lot more profitable over time. So what we're doing is here, we started here on the macro, right? We're on the weekly, as you can see on the top left here or here on this chart. You should always take a moment when you open a chart, no matter how many times you've done it, and take in what asset pair you're looking at and what time frame you're looking at, because there's been a number of times I've moved a little too quickly and I've made an assumption on a chart when I was not gathering all the data first, and that assumption was very wrong. After I wasted an hour or two on doing something when I could have just saved myself all that trouble or the confusion and just look at all the data that's presented to you on the chart. So we're here in the macro. We can see this massive downturn, and again, it doesn't matter at what point in the cycle, now or in a year, you're looking at this. This is a strategy you need to do. We see on the macro, this is looking like it's a bullish setup. However, here on the RSI, this is falling, his price is falling. So there's no bullish pressure that's being built into that. We see flat volume through all this. There's two things that are not agreeing with this bullish cross. Now there is a little bit of bullish divergence here on the stochastics, but as you can see right here, this slight uptick that also coincides with the slight uptick here. So I'm actually not even going to count that as bullish divergence. So all we have right here is a MACD doing what's known as a correct. The MACD is reflecting what's happening in the chart, which is a normal small correction or relief rally in this downtrend. So now, through this, we don't have confidence to buy on this macro signal because all we have is one indicator signaling. And this is why it's important to use a number of different signals that agree or disagree with each other so that you can make highly profitable trades and highly probable trades. So now let's go ahead and look over here where we're at with this recent pump. I'm going to turn this off auto so I can move it. I'm going to double click on the chart, which will minimize the other indicators. And we can see here, volume is increasing, showing a lot more interest at these levels. No interest at these levels because people are just tired of the price falling. But here we're seeing interest come into these levels, which is phenomenal. But we also have price action reacting to the upside. Now let's look. We're going to look at both the MACD, RSI, and stochastics and the BitLab trading suite, so we can get two different views on the same setup, so we can see if there's agreement and confluence or even leading signals that could have let us know we could have got into this move before it happened. So I'm going to double click on the chart, bring back up my indicators. So now we are on the weekly. We start with macro, also always macro, midterm, micro. So weekly, 3-day daily, and then 4-hour and below. Always get the context, get the lay of the land before you continue. So we can see right here, you see this point right here, this is June 20th, 2020 to November 7th, 2022. This is 2022 as well. But we see the price falling, but we can see right here, MACD is going up. This is bullish. This is a bullish increase in pressure and moving averages as opposed to price falling. There's also an increase right here on the RSI. We can see that this, I'm going to do option T for a trend line. There we go. We can see this is going up, same time period, this is going down. Similarly, I'm going to expand the stochastics here. We can also see that this is going down while the price action is going down while the stochastics are slightly moving up as well. So we're having 3 different indicators, 4, because we have volume, MACD, RSI, and stochastics, all showing increased interest and increased pressure as the price action is falling, indicating weeks ahead of time, all the way starting about here, about November 7th, 2022, at this local low. This is indicating that there's a bullish sentiment that was really trying to contend with the bears, which gave us a leading signal. This is why we look macro first, gave us a leading signal to then come down to the 3-day and the daily. We'll just go down quickly to the daily. We're gonna go auto, and we can see, let's go ahead and delete this longer term divergence. We're gonna expand the MACD here. And so what we can see here, this is crossing bullish. This is also right here, the stochastics are moving up, except it gets very overheated very quickly. So we can see the RSI is increasing through this whole period. So the RSI, the pressure, the strength is increasing through this whole period. The 50 line is roughly right here. Inherently, when you're above the 50 line, entering a more bullish sort of sentiment of the market. And as we see, as this crosses into the 50 line, the MACD crosses back green again, meaning that we're expanding with bullish momentum. And look at this flat line right here. We can see on the price action, roughly flat line. And then we can also see on the stochastics, this was already ticking up. This was saying, hey, we've got the other signals all in place. And we had the leading signal from weeks on the macro that now zooming in on this, on the daily, we can see that there's very likely to find a trade entry very soon. So then we can go down to the 4-hour or the 2-hour and we can identify with more precision right where we want to get in. Now, the last thing I'm going to show you before we go, we're going to look at the same thing here, utilizing the BitLab market intelligence, hidden volume, relative extrema, significant movement. This is all part of the BitLab trading stack, which you can get right over here at bitlabacademy.com. Definitely sign up for our newsletter. We're actually doing a huge giveaway tomorrow. We're going to be doing a lot of giveaways, so sign up for this newsletter. You get a lot of great alpha that's sent through here, and you can find more info on the indicators here at bitlabacademy.com/indicators, and there's great stuff going on here. But so what we want to look at is we can see a lot of bullish and bearish divergences, which is what these flags are on top and on bottom. And we can see MACD, RSI, stochastics, momentum, right? So I'm going to make this a little more conservative. I have multiple templates set up so I can be very active trader or very passive trader. As you can see, a lot of signals and fewer signals. So I'm going to make this more conservative, and we can see right here a lot of choppiness. So what I'm trying to do now here, if I'm trying to see if I should short this area because we're up at this macro resistance, now what we can do is we can look at, we have some bearish divergences coming in here. We're seeing some local highs. We're also seeing bearish divergence on the volume, and volume is one of the best indicators in the market because that's where you really see if people are believing in the move or pulling out of the move. In this case, with bearish divergences with price going higher, this indicator within the BitLab trading suite, the BitLab hidden volume, is showing that people aren't believing this moving. There's likely going to be a pullback. So then we can see right here on the relative extrema, this is agreeing with that too, because you can see these giant candles, this histogram bars way outside of this wave is saying that this is an extreme move and price needs to be suppressed back, maybe even pulled back from there. And we can see right here, look at this attempt to push up and immediately gets rejected back down in confluence with this bearish divergence right here. And now we're seeing this red wave on the significant movement, suggesting that this is a local trend top. But this is very choppy right now because we're getting agreement here with downside with bearish divergence as well as the relative extrema. But then we're also seeing more bearish divergence with hidden volume. But now we're seeing the extrema on the bottom and this trend top has now turned gray. So there's not a clear signal right now to take a trade on the 2 hour on Bitcoin on this specific view. So the point here is what we're looking for is confluence with 1, 2, 3, 4, and having at least 3 of those. Not all 4 will always line up, but having at least 3 for a probable trade in congruence also with what you're looking at with candle patterns on the chart. So let's go ahead and look exactly where we were down below when we were looking at, let's go to the 4 hour, this move right here. Could we have caught this move right here? Well, this is a great example of a lot of confusion in the market. Let's go to the daily. There's not so much going on the chart. We see a defined low here, and this is with the BitLab Market Intelligence. We see sideways action. It's fighting against this EMA ribbon, which you can see here on the chart. We're finding a sort of flat level of support here on this move, but we're seeing, look at that, bullish divergences, regular, that's what the R and the H are, regular and hidden, regular bullish divergence, which is hinting that volume's trying to come in and price is not agreeing with it. And then it makes another attempt down, holds. Volume's trying to come in and the price is not agreeing with it. So volume's starting to tell you right there, hey, we want something to happen. Now we have the relative extrema below this cloud. As you can see, below this cloud, that's a slingshot, if you will, to the upside when it's down here, and it's a slingshot to the downside when it's up here. So we see this in confluence with this bullish divergence that we see right here. And look at this. We get this blue signal right here saying trend, local trend bottom. And what happens? Boom. Price goes up to the moon because we found 1, 2, 3, 4 points of confluence. You found very, very clear signals about what was going on the chart because multiple indicators were agreeing with each other. That's all I got for you today. Make sure that you are diligent in your charts. Patience and planning equals profits. You're going to learn that here at BitLab and so much more. Make sure to tune in on a regular basis. Really appreciate having you all here. Wonderful to build this community. Again, my name's Kelly Kellum. Thank you for tuning in. Follow me there. Follow all these socials right down here at the bottom. Other than that, I will see you in the next episode. Adios, muchachos.